Hi there, my beautiful boys and girls. On this paper is an extract from Gauteng 2023 preparatory exam. My mouse doesn't want to scroll now. Okay, it's fine now. This is our grade 12 Gauteng 2023 preparatory examination. I was asked to do dividends per share. Now, let's look at the obvious things that we are given here. Ordinary share capital, dividends. Okay. The directors paid interim dividends of 5 cents per share on 30 September 2022. Which year are we reporting on? 28 February 2023. Right. First thing first, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. If our year is ending in February, it has started in March, April, May, June, July, August, September, October, November, December, January, February. And then from here to the other side, it's 2023. To the other side is 2022. Now, we are told that they have paid interim in September. Was it on the 1st or the last day? It was the last day, 30th of September. So you must be very much careful, because here is the 1st of September. Here is the 31st, is the 30th of September. So we are told that it has been paid on the 30th of September. 5 cent interim. Right. Where are we going to get another information? Remember, we need dividends per share. Right. And how do we get dividends per share? It's interim and what has been declared at the end of the year, either paid or not. Now, let's go to our information up there. Under our current liabilities, we have shareholders for dividends on the last day of the financial period. What does this tell us? It tells us that at the end of this year, we are owing shareholders their dividends, which is this much. Now, how does this amount come to our current liabilities on the statement of financial position? It comes here from what have been declared at the end of the year. When the directors declare dividends at the end of the year to say, okay, we have declared this amount of money we are going to pay to our directors, to our shareholders, and that money is not yet paid, it means that it is under our current liabilities, is payable. Right. So this is an indication. We know that this is our interim. Now we know that we have 315,000. But now, this is declared at the end of the year. Now, we want to know how many number of shares do we have to divide with this, so that we know how much is equivalent to one share. Because we are saying we need to know dividends per share. What is equivalent to one share? Right. At the end of the year, how many number of shares did we have? Ordinary share capital. On the 1st of March, at the beginning of the financial year, the company had 2,500 ordinary shares in issue. We had You know your share capital note, Mus. Your share capital note, where you're gonna have your amounts here, and then you're gonna have your number of shares here, and then here you're gonna have the story. And then at the beginning, we had how many number of shares? We had 2.5. We had 2,500,000, and then on the 15th of May, a further 1,000 ordinary shares were issued by the directors. Okay, 1 million. 1,000,000 additional issue, open balance at the beginning. We don't care about this because now we need to know the number of shares. Right. Ordinary shares were repurchased on the 31st of January by the directors at 1,500,000. Now they're giving us amount of money. They are not giving us number of shares, and we are interested in number of shares. But now, let's see this information if it can assist us. But for now, let's just write here that we had a share buyback. And we cannot disclose the 1.5 million here because we are not sure if there is a portion that need to go to our retained income note. You know that. I'm not going to be talking about that now. Right. Now, we have been told that at the end of the year, we had 3,200,000 at the end of the year. So, to get this 3,200,000, if you need to get your share buyback, you can get it, but I'm not interested in it. Why am I not interested in it? Because we need the shares, number of shares at the end of the year, so that we know how much we are going to put here. So we get a dividend per share. Right. Am I going to take the 3,200? No. Why am I saying this? The share buyback, it only happened just 1 month before we close our financial year. Where am I going with this? Directors can be lenient to say, no man, these people had the shares for the whole year and we only bought them back just a month before we declare final dividends. So, they qualify. What am I saying? I'm saying, if the examiner did not tell you anything about the share buyback qualifying or not qualifying for final declaration, you assume that all the shares qualify for final declaration at the end of the year. Get me very well. I'm repeating this. I know it's recorded. If you want to repeat, you can rewind. But now, I'm repeating it again. If the examiner did not tell you whether the shares that have been bought back, they qualify for final declaration of dividends or they don't, you assume that they qualify. If they don't qualify, the examiner would tell you that the repurchase of share that happened on the 31st of January 2023 does not qualify for final declaration at the end of the year. But if the examiner is silent, you assume that they qualify. So it means that before we do share buyback, how many number of shares did we have? We had 3,500,000. Then, meaning that we're going to divide here by 3,500,000. And how much do we get here? 315,000 divided by 3,500. You get your 0.09, which is your 9 cent. Sorry for that, just me. Now, you have your 5 cent and your 9 cent. Then you're going to need to add them together. 5 cent plus 9 cent is going to give you, plus 5 cent is going to give you 14 cent. And you get your 4 marks. Easy stuff, ne? Don't lose this opportunity. WhatsApp us. Give us the difficult question that is struggling you, and then we shall work on it and upload it. Thank you.